The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and let's see, today is the 2nd, the 18th is 16 days away. You have 16 days to get your stuff in, 16 days, and we're here to help you. 803-0930, 803-0930, star 930 on a cell phone, and I'm joined in studio with Tiff Fabian. Hey, Tiff.
Hey, happy Saturday.
Happy Saturday. And I will tell you, we're going to talk today about last-minute things you should look at and things that you shouldn't take for granted. I think there's a lot of people that should file a return and aren't filing a return. For instance, let's say you're somebody that made $11,000 and you said, I don't have to file a return. That's true, you don't. But you got an earned income credit coming if you don't have children of $1,502.
Right.
So you don't have to file. You just want to file.
Yeah, and if you're somebody who took the option last year of splitting the pension over 3 years because of the CARES Act, you have to file and do your second portion, your second payment of the $86.15.
Or let's say that you're a homeowner and you're paying property taxes and you really have fairly low income. You could have a credit waiting at the state of New York from $250 to $350 by doing the IT 229. Those are just like little things to do, right?
That's
and you
right.
have 16 days.
You do.
16
You do.
days. All right, we want to talk to you about getting ready for the end
Of tax
and
season.
what if you owe money. The first thing I would tell you is double check the return.
Correct.
Right? Just go over those figures. Make sure you put the correct withholding down. Make sure you have the correct income down. That's the first thing I'd look at.
Yeah, because I was with a client the other day, and they went to a competitor of ours, and this competitor claimed his sister and his mother as dependents. But the problem is the sister and the mother had unemployment, and so when they went to file their own return, they got walloped with kitty tax. And so what I did is I amended the brother's return, took them off. And also the young lady had wages and unemployment, and she had college. So you sometimes have to unravel the spaghetti and put it together correctly.
So if you're claiming someone as a dependent and they have unearned income, and that includes unemployment, they have to pay taxes at your rate. So you might have to do a Form 8915, which would make you very unhappy. Could make them very unhappy as well.
Right.
I'm Esther Gulius, the Tax Lady from EG Tax. All of our offices are open Monday through Friday, 9 to 9. Some of our smaller offices are open by appointment only and on certain days of the week. But you can call our corporate headquarters at 632-7886 and talk to our lovely telephone specialist, and they'll let you know how to make an appointment. We will get her done.
We will. We really do. I've been working Sundays.
We're not tired.
No.
We are tired. We want to get her done.
But you can see the horizon, so that really helps.
Right. Let's go to the phones. We're going to talk to Cliff in Tonawanda. Hi, Cliff. How can we help you?
Hi, how are you?
Good.
I've had my taxes done here waiting for my K-1. I got the K-1, and this year we had split the corporation. And now when I put the K-1 in, it's asking me for a Form 7203, and it asks me about a stock. That's the first thing that it asks for. Stock block.
Okay. Did you have a stock loss last year on the corporation?
No.
Then you ignore it.
Because we sold property, I imagine.
Right. If anytime the form asks for something that is not pertaining to you, you ignore it.
Okay.
Right? I mean, if it doesn't have anything to do with you, ignore it. But you know how to handle a K-1?
Well, yeah, it's
Okay. All right. Good.
basic.
That's great. So, what type of business is it?
Rental real estate.
Okay,
Well,
all right.
they don't add money.
And how about the 199A? You're not to do that. The QBI?
Say it one more time, please.
Do you know what to do with the QBI?
It's called the 199A.
Right. Is it a loss, or is there a loss on the K1 or a profit?
No, profit.
Okay. So on your K1, on your rental property, the net profit, if it's handled as a business, which it sounds like it is, then you qualify to take a qualified business income deduction of 20% of the net profit. And so the K1 at the bottom should have something called a 199A adjustment. That would be something that you would you would put in as your qualified business expense, and it's 20% of the net profit.
Okay, yeah, I see that. That's section
Okay?
9A. Yeah. Okay. All right. Thank you very much. But
All right, thanks for calling, Cliff.
Yeah.
I'm Esther Villius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716, excuse me, 8030930. My gum went down the wrong hole.
Uh-oh.
Oh. Okay, so first of all, double check your return, and like Tiffany says,
Unravel
actually,
spaghetti.
I did a tax return the other day, and the mother said, "Gee, I'm waiting for a form," and so the form that we were waiting on was unemployment, and I had to do kitty tax for her kid. Thank God it was not very much, though.
Right.
Right? And okay, then the second thing is if you are somebody that has wages, regardless of your age, take a look at putting money into an IRA. It can make like a 30% swing, if not more, in your refund. And it's the only 30% you're probably going to be getting on any investments in the short run
Yeah,
here.
and they increase the age. If you're a senior and you're working, you can still do that as long as you have earned income, which is really, really nice.
Right, and then it might get you the earned income credit as well. It might get you the pension savers credit, the earned income credit.
The IT
There are
229.
great things that you can do, and you have till April the 18th to put that money in your IRA. Okay, let's go to the
Text.
text.
It says, I moved from Amherst to Lockport and changed the address on the 1040 and the IT 201. But after I e-filed, I noticed I put the wrong zip code. I put Amherst instead of Lockport. I also had them mail the refund. Will the post office figure out the correct zip code for me and deliver it correctly?
I mean, I wouldn't go to the bank on that, not at all. But here's one good thing: is if they reject it and it goes to the wrong address and the post office doesn't deliver it, and I think that they would. You contact the Internal Revenue Service. You let them know because they're going to be getting that paper check back. That's one of the nice things about filing electronically with the direct deposit. It can go into your bank account. And if it rejects, then it goes into a
Yeah,
bank
there's
account.
a missing refund form. It's an IRS form 3115, I think. You can also fill out the form too. You could also call us and we'll help you navigate it too. But it does get kicked back, as Esther
Right.
said.
It'll go back kind of in the dead letter file, and that's what you want to make sure you do is let them know that it's that it's going to probably reject. Then they will reissue it with the correct information. And like Tiff says, it's a 3115. Okay? All right, actually, we're going to take a short break. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're back on the other side with Dave and your calls. Hey, one of those really remarkable things is when people say you're family and like they really mean it. I mean, we really do mean it. And hey, are we perfect? We're not perfect, but I'm going to tell you we sure do try. So I'm Esther Gillius, the tax lady, and we want to help you. We got 16 days, and we will help you straighten out.
And I just want to say that missing refund tracer form is IRS form 3911.
Okay, let's go to the phones. Dave has been so patiently waiting. Hi, Dave.
Hello there.
David.
Hey, what can we help you with?
I got two things I'd like to ask you about, okay?
Yeah.
The first one, I heard you mention the 229 on the New York State. I looked
Right.
it up. I looked up the instructions for line 67, and it references the IT 214.
Well, there is a 214 and there is a 229.
And
The two.
The IT 214 is for people that pay rent or have lower income and paying property taxes with fair market value of their residence of
$85,000
$85,000 or less. That's the 214. The 229 is a refund of property taxes that exceed, with some computation, 6% of your adjusted gross income.
So the 229 is much more liberal.
Right.
so, okay, so the
And the 229 expires in about 5 years too.
So I got to try the 229. The 214.
Well, the 214 you won't qualify for if your house is worth more than 85. Let me ask you this: how much is your AGI in New York State?
But the 229, if that one works for me, that also goes on line 67.
I don't know. I don't
I'll
have
try
the
to look
form,
in a second.
the form in front of me. Let me ask you this: how much is your income, Dave?
It's pretty much interest in Social Security right now.
So how much?
Very little in.
$10,000?
No.
Less?
Wait, are you counting Social Security?
No.
No, way less than that. Less.
Okay, so if it's 1,000 and your taxes are 3, you're going to get money back
On the 229, you're saying.
on the 229, right?
Okay. Okay. Thank you for that. And I got.
You're welcome, Dave.
Yes, one other question. Absolutely. What is that?
When I talked to you guys like a month ago, and I kept hearing things about mailing, not being able to mail, and I called in and I said, did I hear you guys right? You're saying it's illegal to mail in your return?
No, well, it's kind of illegal. It's against the law to mail in your tax return without there being a good reason. Like, for instance, fraud where somebody stole your ID. But it for us, we get penalized if we file your return as a paper return because they do not want a paper return sent.
Well, you guys can't do it, but the feds.
Well, you're not supposed to do it either. I mean, they're not going to come beat you up, but they aren't going to process it with any kind of expediency. They do not want you to file a paper return.
They might not want to, but it references all over the federal and state that you can put a tax. They give you the addresses to mail it.
Right, they do, but I'm going to tell you, it is been adjudicated incorrect to file your return as a paper return without there being a reason for it. But Dave, if you want to have them hold up your refund for a year, do it paper.
Oh, they can hold up my feds for 20 years. I don't care.
Okay, well, that's good. That's good.
All right.
All right, Dave, thanks for listening. All right, let's go to Daryl. Hey, Daryl, how can we help you, sir?
Hi. I have
Hi.
a question about the American Opportunity and any other credits for college.
Sure.
From what I've been reading, I don't think, I as a parent, don't qualify for it. And now I paid the tuition for my daughter. Can she just claim it herself?
All right, first of all, how old is your daughter?
19.
All right, why don't you get it?
Income.
All right, your income's too high.
Yeah.
All right, so does your daughter have wages?
Yes.
Substantial wages?
Probably 20,000, something like that.
Okay, so she could obviously she's in the first part of college, so she could get the American Opportunity Tax Credit. Yes.
But she couldn't get the refundable portion.
She can't get the refundable
unless she
portion, but
provides more than 50% of her support.
But since her standard deductions are around $12,000, she's going to have a little liability, and that'll get rid of that portion of the liability. So yeah, she could.
But the best.
And on the state of New York, she would get the credit as well.
Yeah, there's two parts to the credit. There's a non-refundable and a refundable. You're not entitled to the refundable portion unless you provide more than 50% of your support during the year.
Okay, does it matter?
But she would get the non-refundable portion, and in her case would be about $800.
And she'd get the IT 272 on the state.
Right.
Okay, so should I not claim her as a dependent then?
Because all you're going to get is $500.
But you would get the state.
But you'd get the state, which is 400. So
I
it's
would
like
ru-
6
I
of
would
one, half dozen
I
of the
would
other.
run the numbers and see
Yeah,
what's
you
better.
gotta see how it works out.
If
But
it was you
it's
were
about
my
6 of
client,
one, half dozen of the other. Because if your daughter's saving 800 on one hand and 400 on the other, that's 12. If you're saving 500 and 400, so that's 9. You just have to work it out and see which way is better.
Okay. Okay, thank you.
All right, thanks, Joe.
Yeah, if
And
it was my
especially if he were
client-
single and he was head of the household, that would make a big difference too for him.
if it was my client, I would definitely try it both ways and see
Right.
which way the answer
Right.
is better.
And let's go.
You want to do the
phone-
text?
Yeah.
Can I file my taxes, get my refund, and then dump the refund into my traditional IRA and amend my taxes? Well, I would amend his taxes right
First,
now.
right now, you can amend your taxes anytime, but you can amend them right now, and put that money into the traditional IRA and get some extra tax money
Yeah.
back.
So the answer is yes.
Yep.
Yes. Yes.
Okay, and let's go to Jeff. Hey, Jeff, how can we help you, sir?
This is Jeff.
Hey, Jeff.
Hi.
Hi.
Thanks for taking my call, and thanks for doing the show. It's quite a service to the community.
Well, thank you.
Yeah,
Thank
I have
you.
my question is, we have a rental property, a short-term rental property in Florida. We've owned it for about 10 years, and on paper, it's lost money every year. My question is, do we need to file any paperwork with the state of Florida annually, to document those losses or otherwise inform Florida that we're doing business there?
Well, okay, so if you were a corporation, they would require you to file an annual tax return. But on a rental, you don't have to do anything. There are no state taxes in Florida.
Right. Okay. So my second question is, when we go to sell that property, do we have to report that transaction in New York? And what would we have to report in Florida?
All right, if you're a New York resident, all income earned, no matter where, is taxable. So yes, you're going to have to report that on your New York return.
Okay. Very good.
Unless you're a resident of
Unless
Florida.
you're residents of Florida, which
No, we're
you're not.
residents in New York. We're yeah. So
Yep.
so we
So
will.
not only do you have to pay taxes, you have to recapture all the depreciation that you claimed on that property,
Right.
unless you do a 1031 exchange.
Very good. And in Florida, I guess, would there be any liability in Florida?
Nope, there won't be any liability in Florida.
What's that?
I was wondering, are your losses suspended? Is your income so high you haven't been able to take advantage of the losses lately, Jeff, or you're still able to use the losses?
Yeah, that's correct. We've been accruing those losses.
Okay, so
Oh,
you're going to
that's
be
great.
happy.
Well, that'll help in the year of sale. You know your property's probably worth a fortune down there.
I'm sorry, I couldn't quite make.
I said your property is probably worth a fortune in Florida.
And because you've been accruing those
Right, you
losses,
got those losses
they're
that
all
are-
going to become resurrected.
Right.
Right.
You know that, right?
In other words, that's a help. So your income's over 150,000?
Yes.
Okay, yeah, so those suspended losses are called up in the year of sale. So if you had 200,000 in suspended losses and your gain was 250, then that would mean your gain would only be 50 rather than 250, and that's a good thing.
Right, and we would have to pay taxes on the 50,000 gain in Florida.
No, Florida has no taxes.
Yay, good news.
Okay, you've answered my questions then. So.
All right, good enough, Jeff. Thank you.
And
Thank you. Our Mr. Goliath, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You know, talking about these IRAs, though, they are a phenomenal tool. I said to somebody the other day, moving your money from the left side of the bank to the right side of the bank, and you save $6,000 in this particular example. I mean, because some people are getting earned income credits because of this, because they're manipulating their own taxable income.
Yep.
And getting pension savers credits, and it's just remarkable. So if you are somebody that, like for instance, if you made $25,000 and you're over 65, and you think to yourself, I don't have to file because I have no tax liability. The truth is, you are entitled to the earned income credit if it's from wages. So
And then there's
you wanna
another-
make sure you file.
There's another client that I had put money into an IRA, and it lowered his income so much that he qualified for the IT 229. So it also
And
helps.
that's right. It helps you with the
It
IT
also helps you with the IT
Okay, you
229.
got any other attacks here?
We don't. I know we're heading up to a break, so after the break, we're going to talk to Dave, Leonard, Michael. No, but I also wanted to say that if you file an extension, don't forget to pay your balance due with the extension. It is due with an extension.
Okay, and that's what I wanted to say before break. Don't ignore filing your return because you don't have enough money. A lot of times people will say, "Well, then don't send it in because I don't have the money to pay." Well, unfortunately, the biggest penalty you can get is not the failure to pay penalty; it's the failure to file penalty. So it's 5% per month until it gets to 25% on the balance due. So you want to make sure you get that return timely filed, and they will work with you on a payment program pretty readily.
They will. You could spread it over 60 months. You could go to irs.gov, you click on pay your taxes, and it says not enough time to pay. Click on not enough time to pay.
Or set
and
up
then
an arrangement with filling out a Form 9565. I'm Esther Golias, the tax lady from EG Tax. We'll see you on the other side. We're going to break for news. Hey, we are family. I'm Esther Golias from EG Tax. We have 16 days, and we will get you done. And even if you filed your return and you hear something that you didn't do, you have 3 years to amend your return to fix it. And I will tell you, one of the easiest things to do is to open up an IRA, traditional IRA, or SEP. And there are people that have traditional IRAs that say, "Oh my gosh, I can take the RMD when I'm 72," and they aren't paying taxes, but they could take it out now to reduce the amount they'd have to take out later.
Yep. I did somebody's tax return yesterday, and they put lots of money into a solo 401k actually, and it was a really good thing. They could put up to
Absolutely. Because
$55,000.
it either goes to you or it goes to them, and that you can't ask for it back usually from them.
Yeah.
Unless there's a mistake. So now don't forget, if you have a liability, do the return. And then we can set up a payment program using the Form 9465. They are wonderful. But and then the other thing after that, change your W-4 at work.
Yep.
I mean, if you owe money because you're under withholding, and I have to tell you, a lot of people didn't know how to fill out the W-4, so the employer took out the very least, and you guys know if you have a balance due, and so change that W-4 so it's more in line with the way it should be. You don't want to owe a bunch of money every year.
You don't want to go to
let's
Dave?
go back to the phones. We got Dave from Kenmore. Hi, Dave.
Hi, I just want to say that I've been going to EG Tax for years, and I'm a very happy customer. So
Thank you so much.
Thank you. Which office do you go to, Dave? If you don't mind me asking.
I go to Hurdle in Delaware.
Well, thank you. Appreciate it. Any questions you got?
Yes, I do. This year I became a homeowner. Before she unfortunately passed away, my mom signed the house over to me. And
Gotcha. Sorry about that.
thank you. That was in June. So I've been procrastinating about getting a loan to pay off the mortgage, and I've just been paying the mortgage company, with her.
Her loan.
Right, on her mortgage.
Paying off her payments
Right.
month to month. And I was wondering, should I I have rental income that people live upstairs, and so should I just declare that?
Well, you do have to declare it because it is now your house. You inherited the house, or she put you on the title before she passed. That's number one. Number two, in order for you to take, though, the expenses, it has to be your debt paid with your income. So it is your income. but the mortgage is not your mortgage. Now, maybe in a tax situation, tax court, they would say, well, yeah, Dave really was legally, it was legally his property taxes, but not the interest. So I would suggest you get that new mortgage as soon as possible.
And I would say call Jesse at Cross State Funding. I've got his phone number. He's phenomenal. He can get you, hopefully,
get you
new
all squared
mortgage.
away, Dave.
His phone number is 984-6968. Jesse at Cross State Funding.
And he'll
I've
take you.
personally
Help you.
used him a few times myself. 984-6968. So as
that you don't
as
want-
Esther
you
said,
don't
you
wanna
do have
have
to
a
declare.
problem.
You do have to declare the income
Right.
that you
You
received.
don't want a problem. You want to declare the income and take your expenses. Obviously, if it's your house and you pay the property taxes, that's your debt paid with your money. However, the mortgage is not your debt. It's your mom's debt. And so maybe in some court case, they might be able to prove that Dave really did own that, owe the mortgage. I don't think so. But you, to make sure it's all set, go refinance that house.
Well, whoever helps me Monday, that's when my appointment is. I will. I did get a statement from Kenmore that the taxes were paid.
Right, like I said,
The amount.
that is your debt paid with your money, but the mortgage isn't.
So the taxes are okay to
but the
write off,
interest.
but the mortgage interest
Right.
and any mortgage
So
PMI.
somebody will help you. We'll call them and we'll make sure we talk to them and make sure they know about what you're doing too. Okay, Dave?
But make sure you declare the income, and they're
And
going to
all
do a
your
Schedule
expenses.
E for you. And if they have questions, tell them just to call the corporate office.
Right. Okay, Dave?
Okay, well, I'll definitely do that. Thank you very much for.
And then call Cross State for refinancing.
I just I want to keep everything legal and.
Absolutely.
you know.
Absolutely. Okay, Dave, thanks for calling.
Oh, thank you.
I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. You can text us at 716-8030930. And I got Leonard. Hey, Len.
Yes, hello.
Hi, Len.
Hey, thanks for taking my call, Esther.
Yeah.
Okay, last few years I've been using tax software to complete my taxes.
Okay.
This year I did it all and e-filed it, and then I got a notice saying the federal tax was rejected,
Uh-huh.
and then of course the state got rejected. But the code they gave me was supposedly my spouse's 2020 adjusted gross income doesn't match IRS records. We filed jointly, and I checked everything that I put on there as far as the
You know what I would do? I'd get a copy of your tax transcripts for 2020 and see what they have on there. So I could help you to get a copy of your 2020 tax transcripts, or there's a form you could fill out to get a copy of your tax transcripts. Wouldn't you agree, Esther?
Yeah, and the thing is, you probably just aren't reading it correctly, Len.
I'm not reading what correctly.
You're not reading you're not looking at the information correctly or giving it to them correctly. So if you want to email Tiffany, her email address is tfabian@egtax.com, and she can give you the information. She can give you the form number to request a transcript.
Okay, tfabian at egtax.
At egtax.com.
Okay, I can do that.
All right, and then we'll try to help you as much as we can over the internet, okay?
Yeah, because what I would do is make sure that there's nothing missing. The form is I found it right now. It's a 4506T. So just Google IRS form 4506T, and that request a transcript for 2020, and they'll mail it to you.
But it'll take them a long time to get it.
A little while. If he called me, I could do it faster.
Did you owe money, Len, or are you getting a refund?
I owe money on the federal.
Yeah, well, unfortunately, until you can get that to go, but you can send in a voucher and a payment if you can't get it to go. So, but the thing is, what I suggest you do is 4506 is a transcript, and then they'll send you a copy of what actually was submitted last year.
And if you need help, please email me at
we'll try to help you.
tfabian@egtax.com. I really have
Okay,
a
Len?
heart to help you.
Okay, Okay, now I've got a copy of what I sent in. Of course, I printed it out.
Well, see,
But it's not
obviously
matching.
You're not reading it
So I want you to
correctly,
get a transcript.
Or they changed it and you don't know. That's why if you get a copy of the transcript, that's on their side. Because they won't accept it until it matches what they want.
We need to see what they're seeing.
Okay.
Sorry.
All right, Len. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and our email, our text number, 716-8030930. Okay, let's go to Mike. Hey, Mike. Hello, Michael.
Yes, hello, how are you?
Good, Mike. What can we help you with?
This year, last year, I was left a home and property, and I sold the home and property. What do I have to do now for taxes? Is there capital gains on that or not?
Did you live there, Mike?
No.
So, where did you get the home and property from?
Well, it was left to me in a will.
All right. So you inherited a home and property.
Right.
How long ago did you inherit it?
Well, by the time all the stuff got, they had to do some other things, and we finally sold it in December of.
When did you inherit it?
What year?
Last year.
Okay. So, assuming that the fair market value at the death of the person that gave you the home and property is approximately the same price as you sold it for, there would be no taxable gain when you do the Schedule D.
It goes on a Schedule D, as Esther just said. Mike.
Yeah, because I'm one of the family. I got my papers. I'm going to be going to you guys during the week. I usually go on Trans Road.
Right. Well, the thing is, there's going to be a stepped-up basis, which would be the fair market value on the date of the death of the person who died, who gave you the house to inherit. And so, let's just say it was worth $200,000 when they passed, and it was worth $200,000 when you sold it. There'd be no gain or loss. It won't cost you anything.
Bring your closing disclosure when you go see Kevin. I think Kevin's at that office. So make sure you bring your closing disclosure, because the transfer tax, the lawyer fees,
that
real
also
estate
increases the fair market value.
That'll help. Okay.
I was going to bring those papers with me.
Right.
Good.
Okay, Mike?
You might even have a loss, Mike.
Yeah, because I looked up on the site and it said that if you depended on your income, if you were $40,400, there'd be no capital gains or something.
No, Mike.
Yeah.
There's going to be no capital gains because there's a stepped-up basis.
Because you get that wonderful stepped-up basis.
Whatever it was worth when the person died is what is going to be as if you paid that when you bought it, and then you subtract that from what you sold it. And if they're the same, there's no gain or loss. As a matter of fact, the loss would even be larger because of the expensive sale.
I think you're going to be happy.
You do not have a problem.
You're going to be happy, Mike.
Happy. Be dancing in the parking lot.
Okay, thank you, girls.
All right,
Thanks.
Thank you, Mike. He will be happy, won't he?
He will be happy.
All right, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. Text us at 716-8030930. And we're going to go to, is it Greg? Oh, I got to take a break. Oh, they're telling me to shut up. All right, I'm Esther Golias, the tax lady. We're going to take a short break. We'll be with Neil and Greg and Gary and Norma on the other side. See you on the other side.
Remy.
Hey, to us, you are family. I'm Esther Golias, the tax lady from EG Tax. We have over 30 offices to serve Western New York, Florida, and Arizona. We are here to help you. We will do it in person. We'll do it over the phone. You can drop it off. You can go to our website and go through our portal. We will get it done. And the thing is, things like what that gentleman was dealing with about a rejected tax return, you don't have to worry about that with us. We take care of any rejects, because when the IRS gets a tax return, it's perfect or they don't accept it. And that's what they can do with electronics. I think that's why they don't like paper. And the other thing is I wanted to talk about before I get back to the phones, if you don't have to file, and you fit one of these categories, think about filing. Number one, if your income's relatively low and you worked, look at filing, you'll get an earned income credit. If you have property taxes that exceed 6% of your adjusted gross income, file because you get the the New York 229. If you have children under the age of 18, because you're going to get a credit of anywhere from $3,600 to $3,000 per kid. Do you know that if you had 4 kids under the age of 6 and you didn't work, you get a refund of $14,400? So if you're not working and you don't file that tax return, you leave $14,400 on the table. If you had a newborn this year, because that newborn is worth $3,600 plus the stimulus money that they didn't get last year. You should file if you didn't get your stimulus for whatever reason last year. Maybe your income was too high. And if you don't have to file, but you have withholding. There's people that have withholding and they just don't file. We had a client today that says, I don't think I'll file. It doesn't seem worth it. They got a $2,000 refund. If somebody came up to you with a gun and said, give me $2,000, you'd be appalled. But we leave that stuff on the table all the time. All right, let's go to Neil in Appleton. Hi, Neil. How can we help you, sir?
Hello.
Hi.
First of all, congratulations. This is the first time I've ever called a radio show.
Oh, thank you, Neil. I'm honored.
And for the question, my nephew filed his taxes electronically through a website, and
Okay.
he emailed from them that someone had already filed using his Social Security number.
Okay.
It directed us to the
affidavit
that the IRS uses. And I was just wondering if there was any advice from you on what else we might want to do going forward.
So he has to do an IRS affidavit form. Did you do that?
I have not done that yet.
So Google IRS affidavit form. So you're going to do that, and then you're going to want to put a block on your credit reports and maybe file a police report
And in
too.
his situation, he has to file a paper return.
Yep, he
now,
does.
that's one of the situations where you can file a paper return.
So the most important is the IRS affidavit
Right.
form.
And it may take them some time to unscrew the spaghetti. But in that situation, he's got to file a paper return, and you want to make sure that everybody knows that he's the legitimate Social Security recipient. And in the future, they will probably be sending him a PIN number every year.
I think the affidavit goes with the paper return, and Esther's
Yeah.
right. You're going to get a PIN every year now for your nephew.
Okay.
Okay?
And if you need help, you can email me at tfabian at egtax.com.
Okay.
All right, thank you.
What a good uncle.
Yep, I'll tell you, it's a terrible thing when your identity.
Yeah, I had one earlier this year, and the parents are older. They're about 70 years old, but they claim their disabled daughter. And the daughter's return was rejected because somebody else used the social. There would have been nobody else that would have filed for her. And so we
Right,
did an
except
affidavit.
for, yeah.
It's because her identity was
All right,
stolen.
let's go back to the phones. We'll talk to Gary. Hi, Gary. How can we help you, sir? Hi, Gary. Hello, Gary.
Want to go to Norma?
Hey, Norma. This is Esther. How can I help you?
Oh, hi, Esther. I'm actually, just real quick for that previous person, I had an issue. You can lock your Social Security number so that, unfortunately.
But it's too late now, Norma.
But maybe lock it in case other person, that person who did that once might do it again. So
Right.
it's a good idea.
Right.
There's somebody that's worried about.
Now, do you want to tell everybody how you lock it, Norma?
You can just go right onto the Social Security website, log in, make an account, and then you can just lock it from there. And the only way you can even apply for any type of credit whatsoever, you physically have to go back into that Social Security.
Does it cost you any money to do that on the Social Security website?
Oh, no.
I didn't think so.
Right. But that's a great
Tip.
That's a great thing for people to know. I appreciate you letting our listeners know that. But I will tell you, in his situation, it's too late because he already tried to file his return. But now he can do something about it.
Yeah, and Norma, you had a question.
Yes, and unfortunately, it's about a dear friend of mine she's 77, has over the last year had to fight for custody for her 8-year-old great-granddaughter who's my friend's daughter had custody of her. She unfortunately died during the whole COVID thing, and now she had to fight a nutcase real mother. So now the 77-year-old has custody. And I am trying to tell her she needs to file taxes. She goes, I haven't filed them in years. I don't make enough money. I said, but you have an 8-year-old who you are now able to get money.
That's right, and she's going to get a $3,000 credit for that 8-year-old.
You gave her great advice.
Refundable credit.
And she's just so overwhelmed with just the day-to-day of taking care of an 8-year-old.
Okay, but some of the overwhelming things from a day-to-day basis is that you don't have enough money. Did you say that there was the 8-year-old, that's the only child that she has?
Well, yeah, she had to.
And she is not working, is she, Norma?
Order out either. I'm sorry.
She's not working, is she?
No, she hasn't worked in years.
At any rate, Norma, that lady has a $3,000 refund coming.
And then
because
something
she
on New
has
York.
A child
and
under
the
Empire.
Empire.
Age of 18.
And the Empire.
She's got an Empire State credit as well.
Norma, you might want to.
She wants to make sure she files those.
You might want to get her social and the kids' social, and maybe be a kind friend and do it for her, and then bring her the forms after you do it for her if she's overwhelmed.
And does she own a home, Norma?
Get her. Yeah, she lives alone. She has really no
she
help.
Owns a home. She also is probably going to get the IT 229 refund too.
She does.
So there's all kinds of money that your friend is leaving on the table.
And I'm so proud of her.
Okay.
All right. Thank you very much.
All right. Thanks, Norma.
What a
Thanks
great
for calling.
friend.
And that was a good call. Just want to make sure that everybody knows that there's 16 days left till the end of this tax season. EG Tax is there to help you. And I don't know if you got the flavor of the day here, but when you're doing a tax return, there could be identity theft. Your refunds could be rejected. There are refunds that are only available if you have children under the age of 18, like Norma's friend.
Yeah.
So people that have children living in their home, you have money coming back. You don't have to be working.
Sounds like you almost staged those calls, but you didn't. They were all genuine.
Absolutely not.
Yeah.
All right. Let's go to Larry, my friend Larry in Georgia. Hi, Larry. How we doing?
Hi, sweetie. Doing good. I'll be brief. First, I want to thank you all for, as you preparing my return in lightning speed.
Chris did it. He told me today.
That's great, Larry.
Or yesterday.
But I will tell you, everybody this year, most people at least, that have investments have big capital gains. Don't they, Larry?
Don't they, Larry?
Kill me.
I know. I've been dealing with it all year. Yep. After I give the news to my clients, I'm like, but look at all these capital gains, right?
And people will say, where am I going to get the money to pay this?
Yep.
And you say, well, you made $100,000 in the market. And they don't realize they can go to their broker and get the money.
Yeah, everybody's going gulp. I just did it yesterday, and I said, but your gains were $77,000, and the year before it was $1,500, and so that was $77,000. That was not. There was no withholdings against.
Right. Absolutely, and people don't realize that. So, but by the same token, if you're below the 12% bracket, you might not pay anything either.
Did you have another question, though, Larry?
No, I have a question. Yes. So very briefly, your wonderful Tammy sent me a secure email. I had to send some forms, and I signed them, but I don't know. She didn't give me any instructions how to send a secure email back to her. That's one.
Well, you know what? I'm going to have Tammy call you because she loves to talk to you, Larry. So I don't.
She loves your accent, Larry.
I'm going to just have Tammy call you, Larry, because I don't know the answer.
One last thing before we let you go. Is it nice there today?
Gorgeous. Yeah.
Yeah, well, it's not here.
Yeah, I've got Tammy call Larry.
We love you. Thank you for calling. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 cell phone. Yes, ma'am.
But I just want to say that client of mine who had $70,000 in capital gains, she's still working, and she also has a small business. So she put money into her IRA, and she put some money in her SEP as well.
And don't forget, when you're somebody that, if you're doing your own return and you're self-employed, don't forget that your Medicare taxes can count as an adjustment on the self-employed health insurance line as an adjustment to income. That saves you money too.
I did that
so I just want
yesterday.
to let people know what's the penalties are. Failure to file a tax return is 5% per month until it gets to 25%. Failure to pay is 0.5% per month until it gets to 25%. Accuracy penalty is 30% of the understatement of income. And the other thing is that people need to know is you can pay using your credit card by going to irs.gov/payment. Pay your taxes by credit card. You can use ACI right through the website at the IRS, Pay 1040, or you can use Pay USA. All of them have different fees, and you're going to have to pay a kind of setup fee and a monthly
User
charge.
fees.
But I will tell you, if you're just looking to buy 30, 60, 90 days, the best thing might be to do is to use your credit card.
And then you get
and
points.
like I said, you get the points. And if you can go to the irs.gov /payments/pay your taxes online, and you can use credit cards, right?
That's right. And if you do an extension, try to pay what you owe.
And then an extension. A lot of times people think that it extends the time to pay the taxes. It does not.
Right.
The taxes are due on the 18th.
Yep. And if you owed this year, do estimated payments or consider
But if
doing
you are
estimated
filing
payments.
an extension, you can extend the time to send in the paperwork by using Form 4868 on the federal and an IT 380 on New York State, and that extends the time to get the paperwork.
And if you do an extension and you want to do an SEP, it gives you an extra 6 months to put money into your SEP.
Absolutely. Okay, until next week, which will only be, 9 days, right?
Yes.
Before the end of tax season. I'm Esther Gullius. You can go to our website at egtax.com. We're happy to answer any and all of your questions. If you need the best tax help, EG Tax is there to help you. Thanks for listening. Thanks for calling. God bless you. Have a great week.